So top-down analysis. So what's a top-down analysis? In trading, top-down analysis is a method that involves examining overall market trend on higher timeframes before focusing on lower timeframes for precise entry and exit points. So on this video, I'll be guiding you on how to do a top-down analysis, different way to do a top-down analysis, and how to understand the market direction. I'll be using V75 index under synthetic indices to showcase top-down analysis. Generally, you can use top-down analysis to analyze any market, be it currency pairs under forex, commodities like gold, etc. If you want to get access to the market I'll be using today, that is V75, one, you need to have an account with deriv broker, either demo or real. And this is how deriv broker looks like. You can either go and sign up your demo account or real account. So under deriv, you'll either trade options. You can clearly see here, you either trade options, and there are different ways to trade options. You can use bots to trade options. You can trade options under deriv trader. But for our case, we'll be using the CFDs here down. The second option, you can clearly see there is CFD. So after having an account, you'll either trade options or CFDs on MT5. Options you trade on the deriv platform, while CFDs you trade on MT5 using deriv as a broker. Option is where you find things like up and downs, where you trade rise and fall, things like digits, where you trade even and odd, over and under. Most of you who have deriv accounts know that. And under CFDs, this is where you trade different markets like forex. For instance, currency pairs. You can also trade commodities like gold. You can trade stock indices, derived indices, synthetic indices. So V75, the one that I'll be using today, is generally under synthetic indices. And you'll find them under volatility indices. There are different volatility indices like V75, like V75 for NS. V75 is the one that we're doing. Let me just show you very quick. I don't know if I can get all bits here. You can clearly see under volatility indices, you can get volatility 25 index, volatility 50, volatility 100 index. That's it's under volatilities. There are many things to trade. You can go take a look and CFDs, and you can go even further, click the learn more button and get to know what CFDs are. Deriv as a broker will give you a variety of information before you can get to choose whether you'll trade using them as a broker or you'll use anything else, any other broker to trade. So let me explain V75 a bit before we continue with our top-down analysis. V75, understand that they categorically, they are algorithmic. They are not tied to any real world events. They're just designed to mimic volatility of live markets through CFDs. That's one thing you're supposed to understand. They don't have anything to do with fundamental analysis. They only mimic the real live market, the real world events. So up to there, you've understood where to get these markets, like the volatility indices, and how you can link them with top-down analysis. And having understood that, if you want to go further and have your own account, deriv account, you can register your account using the link below this video's description and follow the steps to sign up your account. So I guess we can continue instead of meddling beside. So as a top-down analysis, I had already explained what it's all about. It's all about trying to get and understand the market direction in a way that be it you're trying to get to understand the trends, you're going to understand the break of structures, etc. So on doing your analysis, you can either use deriv trading view, this one here. You can either use deriv trading view, you can also use MT5 web, or you can combine the two. So today I'll be using the two, and I'll generally start with the monthly and narrow down to other time frame on deriv trading view. So why start with higher time frames like monthly? This is to help you understand market directions, if it's either bullish or bearish. Remember, you either sell or buy. You only have two options. One, you either sell or buy. So you have to understand if the market is bullish or bearish. Top-down analysis can be used to identify different things. You can use this to understand, as long as you understand the market direction, you can use top-down analysis to understand the break of structures, as I said earlier, change of characters, different candlestick patterns, like range, double tops, rising and falling wedge, etc. But today, I'll usually focus on trend and maybe things to do with change of character, break of structure, among other things. And I'll try to explain the things to do with higher highs, higher lows, to identify the market is either on a bullish, bearish, or it's when I say bullish trend, that's like an uptrend. When I say bearish, I'll explain that. So I'll have to focus more on trend and use things like change of character when the market break out of structure, so that you don't confuse the two. In trading, a trend is generally prevailing direction of the price movement in terms of trend. It's the same thing when someone asks you, so what is a trend? Now that we'll be focusing on a trend, what is a trend? A trend is the general prevailing direction of the price movement of the market. It's either the trend will be bullish, that's an uptrend, or what we call bullish trend. The trend can be a downtrend, or sometimes it can be sideways, what we normally call a ranging market. So up to there, you need to understand that under top-down analysis, it will only help you to understand the market direction. And once you grasp the market direction, it becomes so easily, as you narrow down to other time frames, you'll have a clear view of where the market is heading. Other lower time frames may include weekly, daily, 4 hours, until you get to a point where you can enter the market with a valid entry. So quickly under monthly, this is V75, as I said, you can clearly see the market was in a bullish trend, or what we call an uptrend, and then after some times market was like forming something like a range here or sideways, and then after that market clearly went on a downtrend, or what we call bearish trend. If you don't know how to identify trends, you can use trend lines or switch your charts into line charts and try to identify that. So from this, you can get to understand that the market was trying to form three things here. One, a bullish trend, sideways, and then later a bearish. After that, you can zoom in and out to try and get what market is trying to tell you more recently. I'll change this to bar graphs or back to candlesticks, and then try to zoom out. But before I explain this, I wanted to explain something to do with the trend. So by the time I'm explaining things to do with higher highs and higher lows, you are very familiar with the higher highs, higher lows, lower lows, and lower highs. For instance, if you zoom this market very well under monthly, you can clearly identify higher lows, higher highs, but it will be very difficult because there are very few. But if you narrow down under weekly, the more you go even down and narrow other time frames, even lower time frames, the more you discover more higher highs, higher lows, and the market structure, the way it's being designed, it's becoming more clearly. So you can clearly see, maybe I'll switch this to line. You can clearly see now this one. This is what we call, when the market is on a downtrend, it will form a series of lower lows and lower highs. When the market is on an uptrend, it will form a series of higher highs. Let me just do this. It will form higher highs, higher lows. It will come and form higher highs and higher lows. For those who can understand this, let me just go back to deriv trading view, and then I'll switch this to V75. You can just clearly come here. Either you search or you just pick it there. So just write 75, V75 index. So after writing that, just a minute. V75. So I want to use a part here to explain to you what how to identify trends. So let me take path. So we've said that the market is either on a bullish trend or an bearish trend or sideways. That is an uptrend, downtrend, or ranging market. So I'll start by maybe just drawing a market in a bullish trend, forming a series of higher high, higher lows, higher high, higher lows, higher high, higher lows. So once you understand this, it will be very simple to understand the trend of a market, where the market is heading. Let me use green. And then for those who don't know the higher highs and higher lows, this is how you identify higher high and higher low. First, you can maybe label here as a low, because the market is coming from down. If this is a low, then this is a high. Let me just do this. That's a high. I want to change this to main caps. Let me just use it that way. So this is a high, this is a low, this is a high. So you need to understand, if this is a high and this is a low, sorry, and this is a high, meaning this one will be a higher low, because it's clearly below this high. So it's a low, but it's higher than this low. So it becomes a higher low. So you can label that with a higher HL. So higher, this is a high, this is a higher low, this is a low. So what will this be? If this is a higher low because it's higher than this low and it's lower than this high, this one here, it will be a higher high since it's higher than the previous peak. So it clearly become a higher high. We can label it here HH. So you can clearly see we have a low, a high, a higher low, higher high. So this one will be a higher low, higher high, higher low, higher high, higher low, higher high. Hope you get to understand this, because this is what I'm going to use to explain the trend thing, while giving example using the V75. So that's a low, a high, higher low, higher high, higher low, higher high, and that continues. The same when you draw a market heading to a downwards direction, that's a bearish trend. I'll just do this. Then this. Just a continuation of this. Then this. then something of the sort, like that. And then I'll change the color to red. So clearly, this is a reverse of this. If this was a low, meaning this one will be this one was a low, this one will be a high, and this one will be a low. So this one will be a lower high, lower low, lower high, lower low, lower high, lower low. You can clearly label that, but since I'll join this one to here, I don't want to label it low, so I'll just go clearly and label here. This one I've said is a low, and this one will be a lower low, lower high, since it's lower than this low. But bear in mind, there was if it's a continuation of here, meaning this one will become a previous high and then become a lower high. So this is how you label them. That will be a lower high, and this one will be a lower low, lower low, lower high, lower low, lower high, lower low. So you need to understand the basics behind the trend. This will help even to understand the break of structure, change of character, among other things. So you can clearly see under uptrend, we say this was a low, this is a high. So this is a higher low, higher high, higher low, higher high. So assuming this one is not here, let me not assume this one is not even joined, it's separate, meaning this one will be a high and this one will be a low. So meaning if this one is a low and this one is a high, this one is below this high. So it's a lower high because it's below this high. Let me just label so that we can all be on the same page. That one is a high, and then here I'll label it as a low. I want you to understand it's just opposite of this one. If this one was a low, this one will be a high. If this one is a high, this one is a low. Why is this a lower high? Because this peak is below this high, meaning it's a lower high. And this peak, why is it a lower low? Because this peak is a bit lower than this peak, making it a lower low. So lower low, lower high, lower high, lower high. Oh, sorry, I indicated here lower low. That must be, let me just change that. This one should be a lower low. Sorry about that. So high, low, lower high, lower low, lower high, lower low, lower high, lower low, etc. So this one you understand. The first one is a bullish trend or an uptrend. The second one, it's a bearish trend or a downtrend. So it will reach a point where this market need to meet. For instance, if this peak, you will never find a market where they are separate like at this point when it comes to V75. So this peak will have to, as a markets are continuation, it's all in continuation, so they'll have to link up like that. It might not be that perfect, but it's good when you understand. So when it's like this, it means market will be forming something here in a sideways. Market is like moving in a sideways. When you look at this peak, it's not really below this low, but this peak is not also above this low. So at this particular zone is what we call I'm looking for something else. I see if I can identify that zone clearly. Here is what we call I hope that's not that big. change of character. Market has changed from an uptrend to a downtrend. But what is a break of structure? A break of structure is when a market breaks the previous peak When the market breaks above the previous peak, maybe retest and continues, this is what we call break of structure. So you need to understand the difference between break of structure and change of character. Once you understand the two, it will help you to understand when the market is changing from an uptrend and downtrend. So while doing your top-down analysis, what you'll be looking specifically is, one, the market is moving from downtrend to an uptrend. So are we still in a bearish move or a bullish move? So are we looking for buys or sells? If the market is an uptrend, you can either, you see, when market is in an uptrend on a monthly, it can be in a downtrend under 4 hours. So the bigger time frames will help you to understand the market direction, while the smaller time frames will help you to understand the entries. Now that you've understood this, you can always save your work. You can go there, save any name, and you go on. I don't want to save anything because I have already saved my V75, so don't want any confusion. So having understood this, now you can go back to your monthly chart and have to understand the higher highs and the higher lows. Remember the monthly time frame, we said we really want to understand where this market is heading. At first, this market was bullish and then bearish trend. That is an uptrend, then downtrend. You can literally do that by drawing a trend line, and the trend line should have access to at least 3 peaks before concluding that the market is on a downtrend or uptrend. Or you can come back and use this something here structure that I've shown you. So under V75 monthly, we can clearly see, let's focus on the latest. The market is on a downtrend, forming a series of lower low, lower highs. Lower low, lower highs, lower low, lower highs. Then there was something like here, there was false breakout, and then it continues lower low, lower high, lower low. If you enlarge, you can clearly see what the market clearly indicates. You can change that to candlestick and try to understand further. So when you finish with monthly, like for example here, you've really understand that the market was in a bearish move, and up to this point, market is still in a bearish trend. That's an downtrend. It's a downtrend, not uptrend. Downtrend, and we can see a series of fair value gaps here, another fair value gap here, and I've labeled some things here, and like consolidation. This under weekly, I guess. Monthly indicates bearish, so you stick with bearish. You go on to weekly and do the same. You also try to identify where the market is heading. So you can clearly see the market is clearly on a downtrend. You can change that to chart and try to understand. You'll see a series of lower high, lower lows, lower high, lower lows, until at this point where we had our last, this was our last lower high, lower low. Then there was this one, lower high, and then there was a lower low. But then the market came and break out of this previous lower high, forming another high. So this was a low, and this a higher high, and this a higher low. But the market came again and formed another high, but this high is below this low, meaning this one will be again a low, and this one lower high, because it's not above this peak. So it's a lower high below a low since this is a high, using the same structure that I've shown you here. So once you understand this, it will be very simple to understand the market direction. So the market came, yes, it broke out of the previous peak and then went further. This was our lower high, lower low, and then lower high, lower low. But the market broke out from this previous peak and formed a high, then a low, and then a higher high, higher low. But this previous peak, the next peak, failed to go above this peak. So it could have been a higher high if it was above this peak, but it failed to go above this peak, making it a high, and then this one a low, and then this a lower high. So the market, we've already moved from a downtrend to uptrend to again downtrend. So it continues like that. Lower low, lower high, lower low, lower high, lower low, lower high, up to now, lower low, lower high. So the market is still in a downtrend, meaning monthly and weekly we are still in a downtrend. Having understood the line chart, you can also change it to candlestick and see what's going on. You can clearly see the points you've identified. You'll see different candlestick behavior. Like here we have a very morning star. Here we have a very evening star, like very, very big one. They'll help you to understand the market dynamics, market direction with what they communicate. So once you understand monthly, it's in a bearish. Weekly clearly indicates bearish. Not unless this market comes back and breaks above this lower high, the market will change to a bullish. Or the market comes and form another lower low, lower high, and it breaks above that lower high. That's when we're saying there is a change of character. But for now, what we are seeing is a break of structure. That's how I identify this point. So what I expect is the market to retest to this zone. Then after market retesting to this zone, we'll have two options. One, either the market will go above as a sign of change of character or below. But since you want to trade, you can't just wait for that like weekly. That will take weeks, even months. So you narrow down to daily. So having switched to daily, I'll go back to deriv implementation or deriv trading view, where I was explaining you these things. So this is 24 hours. We've clearly seen the market is clearly under bearish, but we expect a bullish. So here's where you come and identify, like there was this zone under weekly. Let me just zoom in and out. Then I can turn this to line graph to make it easy. I don't have to go all this far. So you can clearly see on this pale green line here, there was this peak that is not visible on daily time frame. And if you change your chart to candlestick, you'll clearly see there was this peak, this peak. Again, this zone is acting as a resistance zone. This market came, tried its level best. This zone acted as a resistance zone. The market also came again, market acted as a resistance zone, and then the market is retesting this place again and again. So the possibility is, again, this place will act as a resistance zone. So you can clearly identify this point. That is, let me see, just use this point. That is 76,942. And then when you go to your daily, you can clearly identify that using 76,942 somewhere here. Let me 76. I'll take that and then draw a horizontal line. So it's somewhere there, but you can clearly see under daily time frame we also have our peak. So remember, every time frame has their own peak, which, or rather zones, that you need to understand. They work so different. So I'll just draw two zones. 1 based on weekly, 2 based on monthly. So the one for weekly, I'll make it a bit bold. Let's use 3. And the other one, I'll use 2. Okay, then I'll change this. Oh, before I change this to candles, you can clearly purely identify also the lower lows and the higher highs, whether to identify under daily time frame what the market trying to tell. But it's even visible. You can clearly see the lower lows, lower high, lower lows, lower highs, lower low. The market is clearly on a downtrend. So this was not that hard. So you can clearly change that to candles. And here's where the hardest part hit. Now you have 2 zones. 1 on weekly and 2 on daily. Remember, if you're not a position trader, it means you won't take your trades on daily time frame. You're trying to understand the market direction so you can get to enter the market based on what is happening currently. That is the aim of top-down analysis. Moving from bigger time frames. So far we are from monthly, weekly, we are now on daily. Trying to get to the market using smaller time frame, but trying to understand it from a bigger picture. So under daily, you'll identify we have 2 zones, the weekly and the daily. This one clearly indicates that the market on this zone, the market can do anything. If the market gives you a confirmation here of, remember you're expecting bullish. If the market under 24 hours will give you a confirmation of any kind of this pattern, this zone, you clearly take a bullish. But where will you identify your take profits or something? Remember, we talked about break of structure and change of character under this. We said if the market breaks on the previous peak, that's a break of structure. You can wait for a retest and take another trade, and vice versa on a bearish. So meaning you can clearly change this to line and try to identify where was our previous peak, like this to line. We can clearly see here was our last peak. So you can just I always like using this trend line, but then I aligned it with my need to make it to this cross line to make it more horizontal. So this is our previous peak. That's one thing we can do, change to candlestick. So clearly we can tell the market broke past this peak, meaning there's a possibility before this market hitting this zone. Number 1, market can first come back, retest out of this peak before continuing with the trend. Or you can also identify another fair value gaps, like I've already seen some fair value gaps under 24 hours, though it's tiny, but it's worth it. You can just identify it, a fair value gap like that one. You can clearly see that's a fair value gap. So the market may choose to do different things. Number 1, I'm not looking for that, I'm looking for path. So out from this zone, market can choose to come here and then complete the trend, or the market may choose to come here and complete the trend, or the market first. Let me just blah blah blah. The market may choose to even come and hit this zone first and then retrace back. Remember, on weekly time frame, we said we're expecting 2 things: market to come and hit this resistance zone, come back to this zone where it's our previous lower low that will act as our previous peak, and then market will have 2 options. 1, change of character to go an uptrend, or continue with a bearish trend, which is a downtrend. So you already understand what's happening on weekly, meaning you carry the same information going to daily. So as you anticipate these three, you actually know market can either one, go back, hit this previous peak and go down, or the market may go down fast and then goes up before changing its character, or vis-a-vis. So I'll just remove this to make the chart clean. So already you're anticipating a bullish move. You're not anticipating any sell because you can't take this trade. It's already happening. The market is already going down. So number one, you're only expecting a bullish market. So you'll head down to other time frames, like I like linking 24 hours with 4 hours before heading to 4 hours. So I'll go to 4 hours before heading to 8 hours. So under 4 hours, I'll try to understand what is happening. Number one, before you continue, I've noticed there's a fair value gap here, right? So once you see those fair value gaps, don't even hesitate. Fair value gaps usually indicate that the market will always go back to that place before continuing to doing anything else. So here is a fair value gap. Number two, there's a morning star here down between our zone, meaning there's a possibility. Let me look for path. The possibility this market will go to this place, come back to this zone before come back to this zone before heading to our zone. So I'll come back and get that. So you can clearly see under 4 hours, we have already one option. Market will come up to this zone, head back to this zone, then continue to that zone before indicating either any change of character. That is clearly under 4 hours. But we can see in the last 1, 2, 3, 4, 1, 2, 3, 4, this looks more like tweezers, so you can clearly understand that under 4 hours already found something to do with bullish move. But in the last 1, 2, 3, 4 hours, the market formed another pattern indicating market will go down. So you need to ask yourself why. So you narrow down to another time frame like 8 hours, and then you'll narrow down to 1 hour. So under 8 hours, the market has formed another bearish pattern here, indicating the market is going down. Remember, the market will always follow what is on a big time frame before going on those on small time frame. So on bigger time frame, we have two big candlesticks, 1, 2, then the other one small the other one bigger that overpowered the previous one. And I'll narrow down to 1 hour to see why the market is behaving this way, because maybe there might be a fair value gap or a previous peak or something before jumping into a conclusion. So under 1 hour, let me just check. You can clearly see the more you go down, the more your chart becomes even better. So let me just check under 1 hour why this is happening. So we are here. Let me just zoom why this market came back here. Okay, so we can clearly see there was a fair value gap here. You can also look for other things. What I told you, the trends under 1 hour, and try to understand. So you can clearly see the market was forming a series of lower highs and lower lows, lower highs and lower lows. And up to this point, let me change to make you understand even better. So this one will be our last lower low, lower high. This can't be a lower low since it's above this lower low. So it's a low, but not lower low. Meaning this one will be a high since it's not even above this lower high. So if this is a low, this is a high, this one will be a higher low. And this one, let me come here and here. These are small peaks. Maybe under 15 minutes it'll look better. But for this case, I'll just use this major one. I can just take here up to this here. But I can see there's this last peak and this the last peak as a low and a high. If you change this to candlestick, you'll realize the market broke out of this peak. Meaning we were fully anticipating for a break of structure, meaning the under 1 hour market is changing from a downtrend to an uptrend. And then another confirmation is there's a fair value gap here, whereby the market was either to come back, fill this gap, wait for a retest, take your entry. And again, another confirmation, look the type of the candlestick that we have here. You don't have to master the name of this candlestick, whether they are Marubazu, inverted hammer, doji. You don't have to grasp the names. Just understand the theory behind this candlestick. So up to here, you can clearly see there's a motive behind your bullish take that the market will go up in terms of bullish. So you can decide to take a bullish trend, that's a buy, or narrow down to even 15 minutes time frame to have a better look of the market in terms of all the requirements and see what the market is trying to tell you. So if you narrow down from monthly, weekly, down to daily, up to 4 hours, that's where you expect now to make a decision of saying, up to this point, I'll take a buy or a sell. You can even come back to 4 hours and identify 8 hours. We have a pattern here that indicates the market is going down. So yes, on 1 hour, we have the market. No, on 8 hours, we have this big candlestick indicating that the market is going, down. But is there any explanation to this? Yes. Under 1 hour, the market was going back to fill the fair value gap before we confirm our entry. So number one, you can either take your bullish, you can either take buys and confirm with your risk reward ratio in terms of risk, whereby you can say, we said it was under 1 hour at this point. So you can just come and indicate this I'll show you how to get a TP, but that was not what you're supposed to do today. I always tell individuals, take your stop loss below that peak, and then at that point, this is if you were to take this trade, and then you'll calculate your TP and stop loss. So on the TP, you can head down further and check on 1 hour. Since this fair value gap is so big, it means there's either a fair value gap on 1 hour or 15 minutes that can be used as a target profit. So either 1 hour or 15 minutes. If you find one, even better. If you find 15 minutes, even better. So I can see under 1 hour, we have a fair value gap here. So you can use that instead of using for 4 hours, since it's a bit so big. You'll find a fair value gap there on 1 hour. I'm sure if you also head to 15 minutes, but that will be a lot. So that's how you calculate your entries using a top-down analysis. Or you can go back to 4 hours, and if you're unsure about your entry, the best thing to do is to just wait, because you're waiting for 2 entries. This market to come back here, and then to go up to here, to come back and go. So you don't have to enter even this first trade. You can just wait this market to give you a clear confirmation on this next candlestick here on 4 hours, and then now you can use that as your entry. So you have several options by doing a top-down analysis. So that's what you do when it's come to a top-down analysis, from all the way monthly, weekly, daily, 8 hours, 4 hours, 1 hour, 15 minutes, till you get your entry in terms of either taking a buy or a sell. It's not that simple, but it's something that you can use on any market, whether you're trading currency pairs. You can apply this, and trust you me, it will work, because it helps your mind to understand the market direction. You can clearly identify a lot of things. It's just that today I decided to focus on trend, but you can go on and identify even the small things, the pattern, rising wedge, falling wedge. Go in and identify candlestick patterns, the head and shoulder, a lot of patterns. Go and identify the ranging market structure on every time frame. If you have time, trust you me, you'll get a good entry. And whether you make a win or a lesson, I don't always call it losses or a lesson, it will tell you there is something you went wrong. And when you do a proper top-down analysis, you'll clearly get an entry that a risk-reward ratio is more than 2. It's either will be 1:3, 1:4, even 1:5:6 with a good proper analysis. So that's all about it will most favor swing traders, because you can, if you take this trade, you'll go up to maybe 2 days, 3 days as you wait. But if you are a scalper, you'll have to even narrow down further, but you don't have to use maybe monthly, but you'll have to use monthly to understand the general market direction. Maybe start with the daily and then narrow down. So that is it for top-down analysis, and that's what we do on our channel, Telegram channel. Usually do a weekly V75 analysis, and then I post post analysis and a pre-analysis and post analysis. You can go and check out the previous weeks how the market V75 went, and if you have a comment, maybe you want me to analyze any other market using a top-down analysis, just let me know, and I'll do it. Maybe if you want to access the channel, you'll use the link. Just read the description, and it will help you as a guide. So that is it. And after that, you either wait for that entry and take your win or take your lessons. What you have to understood from this top-down analysis, I want you to go and understand this thing here. This one, from the perspective of change of character, break of structure, and understanding the trends, whether up, down, or sideways. This will help you to understand the entire thing. So having said so, hope this video helps out.